Happy Friday. Welcome back to our weekly market recap. So, investors are nervous. Crypto is correcting fast, while stocks and commodities are still positive. So, what does that mean for Q4? So, is this the end of the bull cycle or just a reset before the next leg higher? Let's dive in. Now, as always, this week we'll focus on the Coin 50 index again. So that's our barometer of the top 50 digital assets and connect the dots across macro, TradFi, and crypto. So as you can see here, Coin 50 has been under pressure after peaking near the 540 level, and it failed to hold above the 506, 500 line. So we now see a classic pattern of lower highs and weakening momentum, similar to setups we've seen in early 2025. So the support levels to watch are clustered around the 487, 480 level, and with deeper zones around the 400 level. I don't expect that we go there, but it's really important that we climb back in the coming days, weeks, and I explain that later when we come to the classic cycles. Meanwhile, if we look at our sector breakdown here, which is based on our indexes, it confirms the weakness here. So meme coins crashed over 55% last week, while DeFi, infrastructure application, and smart contract platforms each lost around 15 to 80%. And even if we look here at ETH, even a large cap ETH corrected sharply, now fighting to hold the $3,900 level and the 4,000 area. So in short, breadth is poor, and Coin 50's correction reflects broader sector stress. Yeah. Meanwhile, if we look at the Bitcoin dominance is rising again, and also stablecoin dominance is creeping higher. So that tells us flows are consolidating into Bitcoin and stablecoins, which is a defensive positioning within crypto. Now, is that a thing to worry? And I think, as always, it's important to look at macro and the TradFi markets. So, in contrast, stocks and commodities are holding up well. Yeah, the discretionary here, for example, let me jump to the other chart. The discretionary versus stables ratio we see here is testing highs, showing cyclical optimism. So I think as long as this ratio is creeping up, we don't have any recession here. And also, if you look at the other chart here, at high yields credit spreads, they are near the lows with 2.7%, signaling no stress in risk markets. And also US GDP came in hot at 3.8%, which unfortunately reinforcing the Fed's higher for longer stance. Now, do I think that will be a problem for the market? No, I don't. I think the economy is strong, and I think positive earnings growth will still dominate, which is a support for equities. Now, really outstanding is commodities. Yeah. So gold is up, silver, that's the next chart here, has broken above $44 and with room toward the $50 mark. And also palladium yeah, has now a nice bottoming formed. Um, and it seems that there is an imminent breakout here. Uranium remains parabolic, yes, fueled by the AI-driven energy demand. And against, I think, this backdrop, the crypto stagnation looks increasingly idiosyncratic here. So, but here is where it gets interesting. If we look at the seasonality, yeah, and what you see here is the path of our digital asset top 100 index, the MVDA, from September to December since inception, yeah, so then since 2015, and we compare it with the orange line. That's the current September path. Blue is the average path, and then you see shaded here the standard deviation, which is of course high in crypto. But as you can see, the September is normally down. Yeah, so we were much better. It seems that we are now compensating that and correcting towards that line. But as you can see here is that normally Q4 is a bullish quarter for crypto overall. And with the positive macro and stock backdrop, I think it still looks valid that this can happen again. Yeah, so if seasonality kicks in October, that could be a turning point. But of course, with so many investors already expecting that the Q4 surge, sorry, there's a real risk of consensus trap here if the rally doesn't materialize quickly. And you also see the divergence here between gold and Bitcoin. Yeah, so gold, precious metals are strong. Crypto is losing attention. Yeah, digital gold is losing attention here. So I think instead of saying gold will follow Bitcoin, I'm still in the camp that Bitcoin will follow precious metals again, especially if you think of what the Trump administration does with the Fed. Um, and that's bullish for precious metals for the store of value narrative, and Bitcoin definitely belongs into that camp. So to wrap up, crypto is correcting fast, yes. So the coin 50 is under pressure, but traditional assets are still positive, and that's the good sign. So I still think it's a seasonality thing, and seasonality suggests Q4 can still deliver a rally in crypto, but it requires confirmation over the next several weeks. That's definitely something we have to watch. Until then, stay defensive, overweight quality, and be ready to scale only when the technicals and liquidity align. Thank you very much for watching. And as always, you can see some of the charts at marketvector.com. Thank you very much.